Good morning, welcome to the market view for Tuesday the 29th of April 2014. Starting off with the daily chart, we can see that the market moved higher yesterday. In fact, let me just change this and zoom in a bit so we can see what's actually going on. We can see the market moved higher yesterday, trading up to the 168.50 level there, trading through it and failing to close, and then moving all the way back down again below the 168.21 level there. The market's still finding support at the 76% area just here. This is a resistance area where the market's come back to and finding support there. I'm just going to delete this one though. So the market finding a bit of support there, but still stuck in this sideways range. If I just draw on the zero extension for you, you can see we've got this, and also I'll just draw this one in, which it's not drawing in for some reason. I don't know why. It'll draw the bottom but not the top. Let me just see if this is the reason. Right, so there we go. So we've got this sideways channel the market is trading at the moment, 168.40 and 167.72 there as well. So the market is sort of range bound between these 2 points, and a break either side will see the market move in that direction. However, when I say this, it means that it has to close above or below these areas in order to continue in the direction when it does break. So still stuck in the sideways range. In the daily chart, yesterday managed to pick up 30 pips, and let me show you how this came about. We've got the original markup here with I'll just pop it onto the right bar there. So we've got the market being filled and then moving on, trading up to 168.50. Now, if you didn't get out the first time, we had another 2 or 3 chances to actually get out with the maximum profit. The maximum actually would have been slightly higher. If I just go to the tools and get the pip measurement tool and go from the entry price up to here, the maximum on this trade was 38 pips. But prior to this, there was the option to collect monies 3 times, 4 times in fact, at the 168.50. You can see you also had warnings that the market wasn't trading through this area, or struggling to trade through, and close through. Even there it closed through temporarily, and then the next half an hour it's back, and then one more push, and then we see the selling come in as well, and then the market just drives back down to exactly where we started, and that is precisely where it's been ever since. So obviously some sort of economic not economic news, but some other form of news obviously hit the wires yesterday morning, sending the market higher and moving prices up to the 168.50 area there. So after that, all night the market stuck in this sideways range again, which we've just seen in the daily chart there. We're back into this range bound market, and as I said yesterday, it's sort of the calm before the storm. So market being tested at the moment to see how well it copes with moving higher and finding selling coming into the market and moving it back. So just before we conclude, let's have a quick look and see what news we've got today that could move the markets. All medium impact until 9:30, when we've got GDP quarter on quarter. It's forecast at 0.94. The preliminary GDP figures to be released this morning, 0.9. If this comes out higher than this, then expect the market to move sharply higher. And this afternoon we've got US consumer confidence, and that will be released at 3 p.m. and the forecast there is 82.9 for this. So again, not a great deal on the economic news front. The GDP figure could be an interesting one. I suppose really it's one I wouldn't want to be in the market when this one is released, because obviously the focus at the moment with the election next year is that the GDP figures look good for the government. So it could well be that it comes out better than forecast and prices move higher. And of course, now I've said that, it's probably going to be the opposite, but that generally would be the consensus there, that what with the new housing boom and the rest of the figures being manipulated, I wouldn't be surprised at all if the GDP figures weren't manipulated as well. Well, in fact, I know they're changing the criteria for it anyway, which there was an article out in the Telegraph the other week where they were going to use forward pensions as part of the GDP figures. So, you know, you work it out for yourself, anything to make the figures look good. So that's it for this morning. And like I say, just watch those GDP figures at 9:30, just in case they are for the release figure is better than the forecast there. I will see you in tomorrow's market view. Have a great day. As ever, thank you for your support and also for watching.